A very good afternoon, ladies and gentlemen, boys and girls. Welcome to this webinar with the title, The Principal Impact of the 2022 Malaysian Budget Proposal, brought to you by the Faculty of Accountancy and Management, FAM, Centre of Entrepreneurial Sustainability, CENS, and Center for Corporate and Community Development, CCCD, Utah. Our speaker this afternoon, Mr. Yap Wai On, is a chartered accountant and a lecturer in the Department of Accountancy, Faculty of Accountancy and Management. He is also a member of the CENS and one of the internal moderators for the Unabsorbed Center, Utah. Mr. Yap has been actively delivering budget talk for the Malaysian budget for the past 3 years in Utah. We are privileged to have Mr. Yap again this afternoon to get more insight about the latest tax development in the Malaysian budget 2022. To all participants, we are all muted by default throughout the entire session. Kindly post your question in the meeting chat. Our speaker will address all your questions accordingly during the Q&A session. Our Q&A will be moderated by Dr. T. Pat Ling and Ms. Lim Wei In from the Faculty of Accountancy and Management. Kindly on your camera for the group photo session when we come to the end. So without further ado, let us welcome Mr. Yap Wai On. Mr. Yap, the floor is yours.
Okay, very good afternoon to all the participants for today, my fellow colleagues, students, as well as the members of the public. Welcome to this webinar on the Budget 2022. And of course, thank you, Mr. Raymond, for your fine introduction. Let me share my slides first. Just to check, is it visible?
Yes, it's visible.
Yeah, okay.
Thank you, Mr.
Thank you. Yeah, thank you very much. Yeah. Okay, now for today's webinar, I will be presenting the, I will take a deep dive onto the Budget 2022 presentations, which actually was tabled at the Parliament on the 29th October by our Honourable Finance Minister. The contents that I will be presenting for today's presentations, these are the key areas that I will be focusing on. First and foremost, I will look at the strategies, the background behind the Budget 2022, how it is being crafted. Next, I will look at the individual tax and corporate tax initiative, meaning what are the new tax measurements that has been introduced by this Budget 2022, which will have impact on the individual perspective as well as the company level for that matter, right? Then we move to the indirect tax. And I will then talk about some of the key focus by the IRB, which most likely they will be zooming in this year and next year itself. What are they targeting at? And of course, I will do a brief summary of the overall Budget 2022. And of course, at the right at the tail end, I will be answering all your questions and queries that have been brought up throughout this webinar. First, I will touch on some of the strategies that the budget has been crafted. In other words, how this budget was actually developed, what are their background. Now, before I move to the detailed Budget 22, let's look back current year itself. Definitely, the pandemic, the COVID-19 pandemic, definitely still not entirely disappeared, right? So it still raised ugly head, causing hardship to both individual and of course to the business community, right? So to present the Budget 22, definitely it will be a great challenge because we are talking about how we balance our life and of course the livelihood itself, right? Life here meaning which our health, and of course livelihood here meaning which referring to the economic generation, how we generate our income. So it's a matter of strike a good balance between our life, our health, and of course our livelihood itself. And of course, this year, we have also been so-called confined due to the so-called restrictions. You recall back way back in June, with the introduction of the National Recovery Plan, phase 1, there was a complete lockdown and also not allowable for interstate travelers. So all these lockdown, basically, it worsened the situation, especially to the economic activities of the nations. So these are the challenges that currently are being faced both by the rakyat and of course by the government itself. Now for this year's budget 2022, the theme is basically Keluarga Malaysia Makmur Sejahtera, meaning which it model along the line of the Keluarga Malaysia concept, which is also the idea of our Prime Minister Ismail Sabri. Now the budget is built on 3 key pillars, which is to strengthen up the recovery of our economic activities, and of course to inbuild resilience so that we are very much well prepared to face the recovery, and of course to drive reform. The budget also anchoring on 3 key focus areas, which is the rakyat well-being, the resilience of the businesses, and of course so that we will aim for prosperous and sustainable economy, especially starting next year itself. So these are key focus areas that the government are actually harping on when drafting the budget 2022. Now let's look at some of the strategies that are being drafted in respect of for the so-called taking care of the rakyat's well-being. First and foremost, to restore life and livelihood. Some of the key strategies that has been developed, among others, is providing social welfare well-being, and of course, later I will talk about the so-called monetary aid that has been provided to those underprivileged. Another interesting thing is also cultivating Keluarga Malaysia, based on the Keluarga Malaysia concept, meaning which to, among others, especially empowering women, meaning which in terms of social benefit, women are given greater permanence in terms of nomination of women as at least one woman in the board of directors of the listed company. So in a way that women are given a permanence in our society today. And of course, building a more conducive living environment, among others, providing the right infrastructure and to the members of the public. For the strategies for the prosperous and sustainable economy, among others, is the sustainability agenda. This is quite interesting strategies. We are talking about to ensure Malaysia are in a low carbon emission environment, meaning which our environment will be duly protected. Next will be bridging the economic gap, and of course the developing a physical consolidation to sustain the revenue for next year. While strategies to build resilient businesses, now we have to admit that SME especially, they are the one who suffer most. In fact, up to date, 40% of our SME already been winding up, right? So the remaining are still struggling, especially facing cash flow strikes. So one way to revive the business, of course, providing the proper financial aid in terms of providing a cheap microcredit loan to SME. This is one of the initiatives that the government has actually initiated. Others including driving strategic investments, and of course, hopefully recovery for some of the targeted sectors, especially the tourism, and retail for that matter, which also badly hit by the pandemic itself. Now let's look at some of the numbers for today's next year's budget, which is basically this chart will show how much has been allocated, which is the amount of 332 billion that has been actually allocated for next year. And these are the sources. In other words, that this is where the funds are being derived. You can see that the majority are actually collected from income tax, which constituting about 36%. And of course, quite worrying is, of course, we also need to borrow. You can see that almost 30% of the total allocated amount are actually being sourced from overseas. The rest are from the direct, indirect taxes, and of course, non-tax revenue. Now, non-tax revenue, for example, it may be your penalty or fine that the government has collected. Those are actually non-tax revenue. Now, next, that is the inflow. What about outflow? Outflow here meaning which how much has to be allocated and spent for next year. These are the so-called sector or segment of the expenses that will be actually allocated and spent for next year. You can see that major expenses mainly focusing on the emoluments, right? And what is emoluments here? Basically comprising almost 26%. Basically, they are salaries, wages, perks, and emoluments paid to our government servant. And next, of course, this is also quite relevant, which is the retirement charges also to award our government servants, and equally quite a huge chunk of it also to use to service the debt charges, which is 13%. So you can see that these are the major expenses that the government is actually allocating for next year. Now you can see that for next year, 2022, the total expenditure is 332 billion. Of course, expected revenue to be collected is only 234, right? So you can see that there's a discrepancy. There's actually a deficit of almost 98 billion, right? Now, this 98 billion, of course, how to source this amount is basically the government will be resorting to the loan, external loan, to fund this shortfall of 98 billion, which actually constituting about 6% of the deficit. This deficit, so-called, will be 6% of our GDP. Now let's look at the this budget 2022 also be crafted based on the assumptions that the growth for next year expected for Malaysia is range bound between 5.5% to 6.5%. It's actually quite a significant improvement from the current year itself. Current year expectation is range bound between 3 to 4%. But of course, the plus point here is at least the deficit percentage actually has gone down from this year 6.8% to 6%. But of course, this deficit is as expected because we need a huge amount of money to be pumped into the Malaysian economy to stimulate the economy to achieve the targeted growth of between 5.5% to 6.5%. So the only way to fund this, of course, government have no other alternative but to resorting to external debt to fund this deficit of the budget for next year. Now let's go to the individual tax measurement. In other words, what are the tax initiatives that has been introduced for next year, which may impact the individual perspective, right? Now, overall, there's not much movement. Mainly, they are extension of the current benefits. But of course, one of the main so-called initiative that has been introduced is, of course, the so-called tax on the foreign source of income that will be repatriated back to Malaysia. This is actually, in fact, one of the hottest topics so far under this budget 2022, right? Let me give you a good picture of what is this so-called foreign source of income that has been so-called remitted back to Malaysia and will be taxable, right? Now, let's go back to historically and currently. Now, Malaysian tax system based on the territorial basis system, right? Now, what is territorial based system? Meaning which any income accrued and earned and sourced within the territory of Malaysia will be taxable. But if you earn your income from a foreign source, let's say you work in Singapore, you derive any income, that will not be taxable. That is the current system under the territorial system base, right? But the system has changed effective 1st Jan 2022. Any income that will be brought in and that income are sourced from overseas, that will be taxable under this new tax regime itself, right? Now, one need to differentiate very clearly about this ruling. I believe some may not be confused as to how the treatment of this income, right? Now, let me lay out to you the nature of the income that may be potentially be subject to this so-called foreign source of income, right? Let me run through Section 4 of the Income Tax 1967. Now, according to Section 4, what are the taxable income that will be liable for our Malaysian tax liability, right? So among others, they are basically can be divided into two types. One is the active income and the other is the passive income, right? Now, active income, what are they? Basically, they are employment income, the income that you derive from working with your employer. The other is the passive income, right? Now, what are they? They are comprising mainly rental from your property, commission that you receive, dividend that you receive from your stocks, or annuity that you receive, or even pension that you receive. All these are basically income, so-called passive income, that if you brought in back to Malaysia next year, that will be taxable, right? Now, always bear this in mind. There are also income in the form of capital income, right? So this also be differentiated. What is capital income in nature? Capital income basically referring to, let's say, appreciation of your stocks, appreciation of your value of your property, appreciation of your value of your antiques, example. Now, if this appreciation of the gain of your income, they are not part of this ruling, right? So we understand capital income, they are not taxable. And if it is passive income in the form of rental, dividend, employment income, if being repatriated back next year, that will be subject to this new ruling, right? Now, next year itself, there is a gestation period involved. The first 6 months, 1st Jan to 30th June 2022, all this income that brought in back will only be subject to flat rate of 3%. Thereafter, commencing 1st July 2022, the rate applicable will be varies in according to your prevailing income tax bracket, which range bound between 0 to 30%, right? So please take note of that. So I will look at the impact from this new ruling. Definitely, it may cause fear among especially those investors who have a lot of funds overseas, right? So I believe next year expectation there will be less inflow of funds back to Malaysia, right? Because very important that out of this ruling itself, taxpayers need to be on the alert. If you wish to decide to bring in back the investment, whether capital form or better, or for that matter, any income form, please stand by all your documents or proof of income to prove that is it in actual fact is a capital in nature, or is it in actual fact income in nature. Now, say for instance, let me quote you a few examples. Let's say you trade stocks, right? You trade US stocks, right? Let's say you buy Facebook or you buy Tesla, right? And you gain out of it, right? There's a capital appreciation gain out of it, right? Now, bear this in mind, these gains are, when you bring it back to Malaysia, they are not taxable because it's a capital in nature. But the IRB may suspect this amount that you buy, that you brought in back, may be a form of passive income. So you have to prove, right? So in other words, that you need to get a proof. For instance, let's say you need to get a statement or proof from your broker, from your brokers to prove that this actually in actual fact is a capital appreciation, right? So stand by. Important thing is stand by with all your proof to prove that if it's a capital income, definitely it's not covered. But if it's a form of income, for instance, dividend. Dividend is different matter. Let's say the dividend that you receive from Facebook, you bring it back here, then it will be taxable. So there's a big differentiation here, right? Another thing that you need to take note is that this tax regime, they are not based on the time that you earn your income. You may earn your income, let's say 10 years ago, but next year you bring it back, it will still be taxable. So you always say the tax will be upon repatriation. So this is the keynote that one need to take note of this particular ruling itself. Next, I will run through some of the initiatives that has been proposed. This is actually the tax relief that has been provided for those who undertake some upskilling courses. This, I think, this is quite laudable, quite appropriate at this time where we need to upgrade our skill. We need to add in more knowledge. So you attend such courses, especially our upskilling courses, which is there's a subsection of 1,000. There's a subsector of 1,000 that will be provided, whereby an individual can able to claim tax relief on that amount. Kick-off is next year itself. Contribution to SOCSO, the amount is actually raised from 250 to 350. Take note, this time is also cover the contribution to the employment insurance scheme, which is EIS. What is this EIS? This contribution is mainly should you future be terminated of your services, then you will be duly compensated pending looking for new jobs, right? So extra amount that has been provided, relief from 250 to 350 in respect of the SOCSO contribution. Tax relief on serious diseases, knowing the situations where health is well, the government have decided to expand the scope of the tax relief from 8,000 to cover the medical checkup, to cover the vaccination expenses as well. Vaccination expense here, meaning which the testing kit, as well as checkup on the so-called mental health itself, knowing the fact that now there is a certain surge in the mental health because of the pressure from the pandemic itself. Tax relief on expenses related to EV charging facilities. This is quite interesting. You can see that if you look back to the Child Malaysia plan, which was announced by our PM 3 months ago, they target, under the Child Malaysia plan, we want to target Malaysia as the zero carbon emission nation by 2050, right? So this initiative is actually crafted to be alongside with this zero emission carbon, which is there is a tax relief of 2,500 given, but not onto the purchase of the EV car, but it's onto those facilities, those charging equipment that you require to charge your EV car, but limited to 2,500. So you can claim it if you have incurred such costs. So far, what has been approved is for starting next year and for 2023. So basically, you can see that the direction of the EV industry will be very bright, basing on this attractive tax relief that has been provided. Contribution to EPF, the relief of 4,000, the amount is still the same as per currently, but this time it will also cover those which are voluntary contribution in nature, right? And also, of course, inclusive of those pensionable civil servants as well. This is a new tax incentive. I understand that the government has actually promote talent, to develop talent among our Malaysians to participate in e-sports. So any winnings, any prize winnings that you have pocketed from these e-sports tournaments will be exempted from tax. These are some of the extension. Currently, the taxpayers are actually enjoying. It's just that it merely an extension of the period concerned. For instance, the 2,500 for the purchase of a mobile phone, computer, and tablet, which ended this year, will be duly extended to whole of next year. So in other words, that this initiative also is laudable in a way that to promote virtual working, especially if you are in need of IT equipment like your smartphones, to facilitate communication, especially at this time when we have to follow the strict SOP, right? Now take note that all these equipment, they are for personal use, not for business use, and of course it does not cover those ancillary equipment like printers, like memory. If you want to upgrade, it does not fall within the 2,500 amount. Please take note. And all these equipment also need to be, they are brand new equipment. They must be brand new equipment. And of course, my advice, once you have acquired it, please keep the receipt for future reference, just in case they may be investigated by the IRB. Childcare center fees relief 3,000 still. Which is presently will be extended the time frame as well. This is actually to facilitate, to encourage, especially the woman to return back to the workforce without worrying about taking care of the child, so that you can leave the child at the kindergarten or childcare center. But the childcare center, of course, they have to be authorized and approved, right? Tax relief of 3,000 to the NOT, either to the NOT scheme or to the PRS, still remain. Again, this is quite encourageable. This is quite an encourageable initiative by the government to encourage more savings, because we can't just resort to our EPF as our pension fund, as our life wire for our future, for our golden years. We need to have a multiple source of funds. For instance, the private retirement scheme. This is another alternative retirement scheme that's been initiated by the government, but administered by the private sectors, which you can invest in as an alternative to the EPF to fund your future needs, especially during your golden years. This also will be extended to year 2025. Tax relief of 1,000 for domestic travel expenses. This is indeed a good news, especially in our government's effort to revive the tourism industry. So in other words, that for instance, you may visit some of the tourism spots, you may buy the ticket, or even for that matter, you pay the tourist, so-called tourist agent, right? As part of the tourism activities, all these fees are actually be claimable, and you can actually claim it as a form of tax relief. This also be extended to next year. Lastly, of course, is the employees deduction of your salary, which currently previously was 11%. But now you have an option. This is an option. This is a decision onto you whether you want to narrow it down to 9%, so that at the end of the day you have more pocket money to take home, to be spent in your daily requirement, right? But of course, this decision is have to be weighted cautiously. Now, bear this in mind, your EPF funds are actually meant for your future needs. You are actually using it currently, so you need to strike a balance of your current needs and your future needs, right? So you need to examine closely the actual requirement, but as in reality, your EPF is actually to serve your future needs, right? Tax relief for COVID-19 booster vaccine shot. This is actually not referring to your first vaccine or second vaccine. It's actually referring to your booster vaccine shot. So if you decided actually to fund your own to undertake this booster shot, you'll be also entitled for personal tax relief. E-wallet credit for youth. This is indeed good news for our students, especially those who are aged between 18 to 20 years. You'll be entitled to receive a credit of 50 ringgit into your e-wallet, so that you have extra cash to spend, perhaps onto your books or some other items to support your studies. This will be effective YA 2022. Not disclosed yet as to when it will be credited. I believe it should be early of next year. Discount for PTPN loan repayment. If you still have outstanding PTPN loan that is still not settled yet, this is also a good opportunity next year to clear off some of these debts. If you settle, for instance, if you fully settle your current amount, you will be entitled for 15% discount. And if you settle half of it, you're eligible to qualify for 12% discount. So take this opportunity to clear off all your PTPN loan if possible. And for those vulnerable groups, especially those B40 groups, which are badly affected by the COVID-19, here the government, as usual, will provide the financial aid, which is also called the helicopter money. It varies, depends on the household income. The amount is a one-off disbursement. Again, no date was actually announced, but likelihood that it will be early next year. If you have money income of a household of 2,500 with the kid of 3 kids plus, then you will receive a one-off cash aid of about 2,000 per household, right? Again, this is a one-off payment. Now let's move to the those initiatives that are affecting the company level. First, of course, is the Cukai Makmur, or better known as prosperity tax. Now, how it Now, for this particular tax is also a bit surprise to the business community. We never anticipate this form of cukai makmur. We actually we anticipate that it will be a windfall tax imposed onto certain selected sectors, which is especially growth, which is making tons of money. But this time, this cukai makmur, or so-called prosperity tax imposed, will be on a general basis as long as your company have earned above 100 million of taxable income. It will be subject to an additional tax rate at 33%, and anything below 100 million will be at the conventional 24%. Now, take note, this cukai makmur only be not applicable to SME or MSME, which is if your share cap pay up is below 2.5 million and your sales turnover is below 50 million, that will be SME. So all this category of companies will not fall into this, will not be liable for this cukai makmur, right? Now, what are the impact from this imposition of this cukai makmur? Is likelihood that, of course, based on the current profitability trend, likelihood that there will be around 230 plus companies expected to be fallen into this category. So in other words, that the impact likelihood will be their earnings per share and their dividend per share will also be affected next year, right? Now, what type of nature of businesses that will most likely be fallen into this trap, so-called this income tax, this tax liability will be in the banking sector, insurance sector, growth manufacturing, of course, pharmaceutical, to some extent, technology sector as well, right? So these are some of the sectors that most likely will be hit by this new tax initiative. But of course, this also this tax collected, so-called, will be channeled to fund to support our healthcare facilities, right? Extension of special tax deduction expiring in 2021 is also a form of extension which is currently enjoying. For instance, if you have rent out your property and you provide a discount of 30%, then you're entitled for the deductions. This will be extended for next year as well. Again, this is a good move so that it will not burden, especially your tenant, which will enjoy 30%, at least a 30% discount. But to qualify this, you must provide a discount of at least 30% and above. Less than that, you do not qualify for these tax deductions. So take note of this. The 300,000 on renovation and refurbishment. This is also a good initiative, especially for those businessmen who need to renovate their premises. Renovation here referring to, among others, for instance, you may need to do some electrical wiring, installation of air-cons, or for that matter, you may need to refurbish your premises to meet the SOP requirements. All those cost expenses, maintenance costs that you incurred, you qualify for tax deduction. Of course, the cap will be 300,000. Good news as well, this will be extended to next year. Further extension to that will be the double deductions. Again, this is good news. Those companies who provide scholarship, this is open only to Malaysian students to undertake their degree, diploma, or level. They are entitled for double tax deductions, as well as internship. If you hire interns to be part of your workforce, you also be entitled for double deductions. But of course, to qualify this, you need to register with Talent Corp before you hire the internship, to take note some of the procedures that you need to have. This is also part of our government strategy actually to reduce the unemployment and giving more opportunities, especially for the fresh graduate to secure jobs. Deduction on employee accommodation expenses. This is for next year, basically under the Safe Work program. Basically, if you have provide a form of rental expenses, that also qualify you for deduction up to a limit of 50,000. Again, this is a so-called a social benefit accorded to the employees. Tax rebate for SME and MSME. This is actually another good initiative to encourage more investment, more opening of new businesses. If you are Sendirian Berhad, which just started your business and you have just registered your businesses, this year and next year, your first 3 years of so-called taxes will be exempted. Again, this is to encourage more participation into the business community, especially SME. Extension of tax incentive for tourism industry. Of course, we're fully aware that tourism industry was badly hit, despite the fact that the domestic tourism bubble has actually been opened, but definitely by resorting to our domestic tourism, it will not be sufficient to revive the tourism industry. We definitely need to get support, especially from the foreign tourism, right? Especially from China and from Singapore, right? Which at the moment are still not fully allowable yet. This is in respect of the tax exemption for the as high as 50% onto the statutory income. But of course, this is again limited to tourism industry. It's not open to all sectors. And of course, the some of the accelerated capital allowance eligible if you buy the locally assembled excursion passes. This also has been extended. Now, carry forward of unabsorbed business losses. This initiative actually also a good move. Why it was actually initiated was because we know that the fact that, especially during this pandemic period, last year, this year, a lot of businesses have suffered losses. So these accumulated losses, how to utilize it to offset your future tax, you are allowed now to carry forward it. So-called the time bar now has actually been extended. Last time used to limit up to 7 years. You're allowed to carry forward to the maximum of 7 years due to the huge losses that most SME have actually suffered, especially during this crisis period. The government decided to allow to carry forward these unabsorbed business losses to be utilized up to a maximum of 10 years. Additional reinvestment allowance, this again a good initiative. The period in more now has also been extended. Reinvestment allowance is actually allowance given especially to the manufacturing sector who have decided to expand their premises or invest into some automations as part of their growth strategy. So this RA period time frame extension is definitely a good news, especially to those manufacturing sectors. Tax exemption or income for social enterprise, of course, this only be applicable for only social enterprises, which is exemption income for a period of 3 financial period. Tax deduction for booster vaccine, if you as an employer decided to fund the cost to vaccine your employee, again, this is booster shot, not the first or second vaccine, then the cost involved will be subject to income tax deduction. So it's allowable expenses for this booster shot. Other tax initiative that has been mentioned as part of the budget 2022 for next year, good news, especially to ease the tight cash flow suffered by the SME, especially for next year, the first 6 months, you do not need to pay to service the 6 months installments, you can only start paying the monthly installment effective July onwards, right? So make sure when you submit in your CP 204 or CP 500, make sure you mention correctly the amount commencing July to December onwards. So at least ease your cash flow during your first 6 months of next year. Revision of the tax payable estimate this is also a good initiative, especially to ease your cash flow projection. The practice now is you're allowed to revise your tax estimate twice, which is month 6 and month 9. Yeah, and now the government has given more room for you to revise it by the 11th month, so that you have a better projection of your expected tax liability. Implementation of the TIN, this is another good initiative, meaning which I'm sure most of the most of the workers now, they do not register with the IRB. Now with this system into place, which is the TIN system, as long as you have attained the age of 18, you will be automatically allocated a number, meaning which your file will be opened with IRB. That is for individual. For company, you are registered with CCM or SSM, you will also be allocated a TIN number, so that, in other words, once you have duly registered as a company and duly attained the 18 age, then you will be assigned a number, right? Now, other usage of this TIN, what I understand from this adaptation of this TIN numbers is, if you need to perform certain transactions, for instance, you want to open up an account, or you want to buy a high purchase, a high ticket items, for example, you want to buy a car or buy a bungalow or apartment, right? So all these are high ticket items. You need to declare and state this TIN number, right? So that to ensure that you are actually have been registered with IRB, and of course, have duly declared and paid your income accordingly, right? Tax compliance certificate issued by IRB as a prerequisite for companies to participate in the government procurement. This is also another good initiative. If your company wish to bid for any government projects, you need to get tax clearance from the IRB, right? So, of course, in order to secure this tax clearance, you need to ensure that you have done the proper declarations and have remit all your tax liabilities, no outstanding, before the IRB will be able to provide this tax clearance certificate for you to bid for the government projects. Another initiative that one need to take note is that nowadays the DG, the DR, the Director General, is the DG, the DG of the IRB. Now they have the rights actually to call upon your banks to check on your transactions of your bank without any reference back to you, right? So they do not need to seek your consent. Straight away, they will contact, for instance, CIMB or MBB to check on your transactions that have taken place within your bank account. So there are some of the initiatives under the company perspective. Now we move to the indirect taxes. Sales tax on low value goods. I believe this may a bit sad news or disappointing news, especially for those who shop regularly online, especially those who buy nowadays, whether you shop on Lazada, Shopee, or for that matter, Taobao, or even Alibaba for that matter. This definitely will be so-called affected by this new tax regime, which is in a way the sales tax will be imposed on those goods that you buy, which are below 500 ringgit in value, right? Now, always take note that why the government have actually decided to resort to this initiative of imposing the sales tax of 10% onto this low value goods is to allow a balanced and fair level of playing field between the local seller and, of course, the overseas seller. So end of the day, you as a consumer, whether you source it, you buy from the overseas supplier or you buy from the local supplier, it will be equally treated subject to same sales tax, right? So these are reasons provided for having imposed a tax onto these low value goods. But the good news is it will not start immediately, but only kick off 1st Jan 2023, right? So in other words, that you have a full 1 year to shop to the max before it kicks in. This new sales tax kicks in on 1st Jan 2023. Sales tax, service tax on delivery charges. This again affecting those online shoppers as well. Currently, the practice is that the delivery charges registered with the Postal Act will not be, those delivery charges that are not registered under the Postal Act, they are not subject to this service tax, right? For instance, like Grab, right? Or for that matter, Lalamove platform, they are not registered with the Postal Act. Now, effective 1st July 2022, which is again a slight delay through the mid of next year, all those delivery charges, with the exceptional of food, will be subject to the 6% service tax, right? So in a way, you may need to pay extra 6% onto the delivery charges, right? Bear this in mind, this 6% is on the delivery expenses, not onto the value of the goods that you buy, okay? So of course, this one, I don't see this one, just a very nominal sum. I don't see it will create any repercussion, especially a significant drop in the online sales. The amount is quite minimum. We're talking about 6% onto the delivery charges. We're talking about, let's say, for instance, the delivery charges normally you range bound between, for instance, let's say 5 ringgit to 10 ringgit. So it's 6% of this is very nominal. Special Voluntary Disclosure Program, this initiative is also quite laudable. In other words, that if you have outstanding sales tax, this referring to indirect tax, if you have make an error in your computation and declaration of your sales and services tax, now you can come forward and voluntarily declare to the custom, right, onto the error that you have committed, especially you have under-declared your sales tax previously, right? If you have come clean now, declared it voluntary, depends on the value and depends on the stages, you may not be subject to penalty. The government may not impose you any penalty. Again, the full details was not actually fully disclosed. They only disclosed that there will be 2 stages. One will be penalty-free. The other will be a certain penalty of 50% will be imposed, right? Now, why this initiative of voluntary disclosure is being initiated is it seems that the government to encourage to collect back some of the under-declared income. So this is a way to fill up our government coffers. So they will rather resort to this voluntary program for the taxpayers to come forward, to come clean and declare all the under-declared income to fill in our government coffers. Extension of tourism tax exemption. This is definitely in an effort to boost the tourism sector. There will not be any tourism tax. I believe, not mistaken, the tourism tax of 10 ringgit per bed, per room, per day, per night, previously was imposed prior to the COVID-19. This also been exempted and extended for next year as well. Sales tax exemption, sales tax holiday. This is again good news to those who wish to buy a new car. This only applicable to passenger car, right? Which covered SUV as well as MPVs. If it's locally assembled car, there will be a sales tax waiver of 100%. If you buy the car now, and also duly extended to mid of next year, right? If it's a fully imported version, the sales tax exemption is only half of it, which is 50%. So it's a encouragement for people to get a new car. If you go to the statistics recently, in fact, the car sales has actually been increased, partly also due to this tax holiday. Now, just now the tax holiday for passenger car, they are referring to fuel by gasoline. For those EV vehicles, they are also not forgotten. EV-based vehicles, whether they are imported or locally assembled for that matter, they are also free of any import duties, excise duties, and of course sales tax, right? This will be effective next year as well. Take note that these EV vehicles, they have to be fully EV, fully electrically run, hybrid of gas and electrical. They do not fall into this category. It has to be 100% EV to qualify for this tax holiday. So again, this is a good initiative as part of government effort to promote zero carbon emission. Excise duty on sugar sweetened beverages. This is actually expansion. Way back 2 years ago, this so-called, it's an excise duty. 2 years ago, those ready to drink beverages like those carbonated drinks, they are subject to excise duty. If I'm not mistaken, it's about 40 cents per liter, if not mistaken, those that contains excessive sugar as part of their ingredients, right? But now the scope have actually been widened to include those pre-mix, here referring to whether it's a 3-in-1 or 2-in-1, especially coffee or cocoa mix, that also will be subject to this excise duty. This is also a good move as part of government to raise health consciousness, knowing the fact that Malaysians are among the one of the highest with obesity and diabetes. So this one way to curb the intake of sugar is to impose this excise duty to discourage Malaysians from consuming more sugar and to lead a more healthier lifestyle. Duty exemption for entertainment premises, this again a good move to revive, especially the entertainment sectors, those involving sports programs, stage competition, or even movie theaters. But of course, this exemption only applicable to those located in the federal territories only, not the whole nation. So there will not be any entertainment duty will be imposed. So you save on your entertainment duty, which also will be effective starting next year. Revision in RBGT rates, this indeed a good news for the property sector. The current practice is that now let's look at what is RBGT, real property gain tax. This is the tax imposed if you sell your property at a profit, at a gain, a tax will be imposed. Let's look at the tax rate. Whether you're an individual, company, or foreigner, you'll be subject to a certain rate depending on the time frame that you have disposed of your property. But starting next year, those that you dispose of beyond the 5th year, previously was subject to 5%. Now the ruling has changed. If you have disposed your property beyond 5 years, there will be no RBGT imposed, right? Now, bear this in mind, this RBGT is actually, the whole idea of imposing this RBGT is actually to stabilize the property market and also to avoid any speculative. I think it's fair enough after 6 years, after 5 years, to be free of this RBGT. I think it's viable enough, will not create any so-called instability to the price of our local property market. So definitely with this waiver of, definitely hopefully it will so-called stimulate especially the property, and in particularly those overhang properties that still need buyers. This will encourage more buyers to take up some of these overhang items, right? So of course, those who wish to sell off the property, advice is wait until at least early of next year to qualify for this waiver of RBGT, especially those beyond 5 years. Stamp duty for dealings in shares of listed core. This is actually very discouraging news, especially to those stock traders, our local Malaysian stock traders. In a way, currently, yes, there are still those who trade stocks on Bursa Malaysia. They have to pay nominal stamp duty sum of 0.1% onto the value of shares that you have transacted. And on top of that, of course, now the stamp duty charges has actually changed. The 0.1% has actually been risen to 0.15%, which considered as a very steep rise. We're talking about 50% increases. Definitely it's a bad news for stock traders, because especially if you trade a very large volume, definitely you need to pay a heavy price for the stamp duty. Now, my understanding is with this imposition of this extra stamp duty charges, Bursa are among one of the highest stamp duty fees among the bosses of the Asian countries, right? So in a way, it may discourage not only our local retail players, as well as discouraging the retail investors from investing and trade into our local Bursa Malaysia. Extension of stamp duty for M&A. This effort is also quite laudable to stimulate more business activities. If you have entered into any M&A, any mergers and acquisitions, the stamp duty liability for the M&As will be waived off. Peer-to-peer financing, this is a form of financing is actually getting more popular, especially among the SME who wish to secure loan or micro loan to fund their activities. There will also be stamp duty exemptions for those agreements involved in this peer-to-peer financing. But of course, the financier have to be duly registered with, it's a approved financier registered with the Security Commission. Stamp duty exemption as well for those loan agreement, especially those involving restructuring of your loan agreement and those involving rescheduling of your loan agreement. The stamp duty liability will also be waived off. So this is a way to encourage more to reschedule, to restructure your loan repayment. Next, we will focus on the key focus of IRB to be expected for next year, which are the area that they will be working on. You can see that from this graph, these are the tax revenue that being collected by IRB. You can see that this year, 2021, of course, this is based on the until July, which already have pocketed 67 billion, still way behind the expected target of almost 120 million, right? And of course, next year will also be another high target with an increased collections. Remember, this revenue will be utilized to fund the expenditure expected for next year. And the setback is as per announced by MOF because of the so-called the declining economic activities, and of course because of the stricter imposition of the SOP. This may hamper the government effort to collect the tax revenue from the public. Now, what I can discuss here is that these four key areas that the IRB may be focusing on. Firstly, on those high net worth individual. Now, who are those high net worth taxpayers? They are actually who have in their possession, whether it's a property, whether it's a cash, especially those cash kept offshore, those at the tax haven. The government, IRB especially, will be focusing on them, will be anticipated to investigate their sources of income. So my advice, especially those belongs to this category, please stand by with all your proof, your sources to prove your income, they are genuinely obtained, and of course at the same time, the tax liability, the corresponding tax liability have been duly declared and have been duly settled, right? Black economy, what is this black economy? Basically, those so-called illegal activities. For instance, the smuggling of the illicit cigarettes, wine, which is very rampant. So government, the custom now is curbing on all these illegal smuggling, which actually avoiding especially the import duty and excess duty, which is a good source of revenue to the government. Next will be the audit investigation. I believe IRB now is intensifying their effort to undertake more audit investigation activities to look at, to examine the calculations, the submission, the declaration done by the taxpayers. So my advice on this part, please make sure all your documents, all your receipts are in order to ensure they can be properly audited and verified by the IRB should the need arises. Transfer pricing, this is another hot topic which is IRB are actually focusing on. It can be considered as a low-lying fruit by the IRB concern because within this transfer pricing subject, now actually what's this transfer pricing subject is basically those involving transactions in between the companies within the same group. In other words, that whether it's a selling of goods or services, provision of services, rental, or even loan to the subsidiaries or the associates. IRB, you have to ensure that all the transactions, the value that has been entered into, they are at arm's length. So in other words, that the value of the transactions, they have to ensure that it's on a commercial basis and not in favor on certain parties, right? So of course, in reality, it may not be so, right? So especially SME, especially, so make sure your transactions that be entered into, you have to ensure that these transactions entered into, they are at arm's length to avoid any investigative work to prop onto your transfer pricing policies. Next, I will summarize out the budget 2022. Definitely with a huge amount of 332 billion allocated, definitely it will deemed to be considered as an expansionary budget. Definitely at this crisis, we need such a huge sum of money injected into the economy to stimulate the economy, to provide job opportunities, and also to ensure that the livelihood will not be impacted, right? Definitely, this budget will be considered as an inclusive budget. It's quite a comprehensive budget covering all sectors, all individuals, provided with all the goodies thrown in from the financial aid that has been provided, both to the individual and of course to the SME particularly, with the hope that it will revive the economy, with the hope that it will further making the economy more resilient to pump drive the economy for next year to hit the targeted growth of between 5 to 6%. Of course, one need also to look at some of the critical issues accompanying this budget 22. One of them is, of course, the federal debt level. Just now we discussed that there's a deficit involved, and government have no other choice but resorting to external borrowings to fund the expenditure, which is now, with this funding, our government debt already reached almost 1 trillion of debts in hand, right? Which work out to around about 63% of our GDP, right? So it's quite a worrying trend. Why I say so is because foreign agency like Moody will view this a very discouraging note. With a high debt, definitely they may downgrade our so-called perception, which may result in our, especially our debt, our bond and our so-called interest to be rising up, right? So this not future-wise, it may not be encouraging on this part due to this high government debt level, right? At the same time, also we need to service this debt. Just now as evident, a majority of our operating expenditure are needed to fund this, to service the interest and installment for this high government debt. Next, of course, is the transparency and accountability. You can see that each year, every year, we only look at the amount allocated, right? We do not seem to pay focus on how much it actually was spent, how much it was actually being not only allocated. I'm not referring to the allocation amount, but I'm referring to the amount that has been incurred and spent. So no actually priority or so-called no focus is being put into here, because definitely with the huge amount of 332 billion, we next year from now, we need to see how much was actually been spent, how much it actually has reached the rakyat, whether it's beneficial to the rakyat. So we need to be accountable for all these amount so that to provide greater transparency and proper governance. This is vital to curb any, to prevent any mismanagement and of course corruptions. Next, I will talk a little bit on GST, goods services taxes. Of course, this time, quite surprisingly, the budget did not touch on this subject, GST, but from what I can foresee that GST definitely will make a comeback, not in the near term, but I foresee probability in 2024, 2025. Of course, GST will be more preferred indirect tax as compared to services tax because of this it's a more efficient tax system. But of course, the government on its side as an administrator need to improve the efficiency of managing this GST, especially in terms of refunding the excess GST amount, right? So definitely look at the situations now. In fact, I came to know Custom Department now, they are gearing their staff up to handle this GST, looking very highly likely that this GST will definitely make a comeback in the near future, right? So that basically conclude my views and explanations on the Budget 22 initiative. In the meantime, if you need any collaborations, I'll be here to support in the area of taxation, financial planning, corporate restructuring, as well as risk profiling as well. If you do need my services, of course, you can drop me an email for the support services that I can offer. I thank you very much for your attentions. Now I pass back to the MC in charge.
Thank you so much, Mr. Yap, for your insightful sharing on the direct and the indirect tax development in the Malaysian Budget 2022. And we also heard about the vast debate on the Malaysian Budget 2022 when it comes to the stamp duty, the foreign sources tax, and other concerns. So we are like to hear more from the Q&A. So the Q&A session will be moderated by Dr. T. Pat Ling and Mr. Lim Wei In from Faculty of Accountancy and Management and SENS. So so we are now come to the Q&A. So Dr. T,
okay.
I pass the floor to you.
Yeah, thank you, Mr. Raymond. Yeah, thank you, Mr. Yap, for a very insightful talk on Budget 2022. So, Mr. Yap, I will go through some questions compiled from the participants during their registration first. Then only go through the questions in the chat box. Okay, so the first question is about the sales and service tax on the online buying. I think just now we have touched about, you mentioned that the services tax on the delivery charges is quite minimal, but how about the sales tax? So the question is asking, will that affect the trend of online buying among Malaysians?
Okay, actually, this is quite interesting questions. We must understand first our lifestyle now. Our lifestyle now, because of the lockdown, and the restriction place, we are more our lifestyle more tuned to online buying. We are resorting to online to do our shopping rather than going out. And of course, also because of our hectic lifestyle, we don't have the time or luxury actually to go out to shop. So online buying or online shopping is actually the trend now. So with that imposition of that sales tax onto that low value goods, I don't foresee also any negative repercussion that will affect the sales volume of online. It's also a very minimum impact I foresee, because as I said, I believe now shopping online is part and parcel of our Malaysian lifestyle.
The next question is about okay, the participant is not sure whether there'll still be a waive on the MOT for the first-time house buyer until 2025, because the house ownership campaign already ended in 2021.
Okay, now, I believe this referring to the home ownership campaign, right? Now let's go back to this campaign. Again, this is a very good initiative started off by the government. If I can recall, it commences way back to 2019, right? So one of the part of this initiative was in order to sell off, especially those overhang properties. The initiative provided, among others, to encourage more of these overhang properties is, among others, a 10% discount is being provided. Matchmaking between the buyer and seller, those overhead properties with the potential buyer, so that to create more ownership. Waiver of stamp duty, especially on the MOT, the memorandum of transfer, and some of the loan agreement, which is part of this home ownership campaign. But unfortunately, the home ownership campaign will be discontinued, much to the disappointment, especially from the property players. They anticipate that this home ownership campaign, in fact, should be prolonged or extended, but unfortunately, it will be ending end of this year, right? Now, on your questions onto the stamp duty, onto the memorandum on transfer, my understanding is definitely with the ending of the home ownership campaign, the stamp duty or the MOT will also be ended at the same time. So in other words, that the stamp duty waiver will not be waived off for this MOT. What I would advise is, if you can, please execute your MOT before end of this year, right? Which before the home ownership campaign ends. Because as far as I'm concerned, I look at the announcement of this budget 2022 in terms of stamp duty waiver is only applicable to certain selected agreement or contract. Just now I mentioned, among others, the contract note for the trading of shares, the restructuring and loan agreement, but did not cover MOT, which is in fact part and parcel of the home ownership campaign initiative. So with the ending of the home ownership campaign, simultaneously ending the waiver of the stamp duty for MOT.
Okay, the next question is, do you think the implementation of the one-off prosperity income tax, the Cukai Kemakmuran, is going to frighten away foreign multinational companies to carry out foreign direct investment in Malaysia? Because currently our Malaysia corporation tax rate is already higher than the other Asian country. For example, Singapore is only 17%, Hong Kong 16.5%, and Thailand 20%. So do you think it will affect the FDI into Malaysia?
Again, a good question. Yes, I do admit that Malaysia do have a relatively higher corporate tax. You can see that, of course, for SME will be 17%. For normal company will be at 24%, which is rightfully pointed out. If you benchmark it against other countries' corporate tax, for example, Singapore, Thailand, they have about 18 or 19%, or even Hong Kong is very much lower, right? Which put us in a very uncompetitive advantage, right? But having said that, if you look at the Cukai Makmur, bear this in mind, this extra 9%, which is 33%, imposed onto the extra 100 million taxable income is only a one-off tax regime, meaning which is only be applicable throughout next year only. So on a limited time frame. So as to the impact onto the influx of foreign investment, I don't foresee any major disruption to the influx of investment into Malaysia, as this tax memo is only on a one-off basis.
I think the next one is a very favorite question. I also see in the chat box, so maybe I put it together. This is regarding the tax on the foreign remitted income. So do you think this one will bring negative impact to the Malaysian economy? For example, those Malaysian talented expatriates who work in foreign country. So with this implementation of the tax, will it like discourage them to choose to come back to work in Malaysia in the future?
Okay, now let's go back to historically. Now, if I'm not mistaken, way back to, I can't really remember the exact year, but during the Asian financial crisis, right? The government has actually decided to waive off this imposition of tax onto this foreign income, in the mean to encourage more funds to be repatriated back to Malaysia to pump prime the economy with more influx of investment. With this new system, with this new tax system onto the foreign source income kick off 1st Jan 2022, definitely it will cause a dampener. Definitely, especially if you are Malaysians working abroad, you may think twice of actually remitting back to Malaysia. In a way, yes, I do agree. Midterm, it may have a impact onto the repatriation of funds back to Malaysia. But my latest understanding is now people are lobbying, people are discussing, the rightful authorities are actually discussing with IRB to review this particular tax on foreign source income. Hopefully something positive or new development is being concluded, perhaps maybe to revise again this particular tax regime, which of course is a great discouragement to repatriate funds back to Malaysia.
Oh, well, Mr. Yap.
Yes.
When we talk about the foreign source of income, right, there is one question from the participant. Let's say the participants asking, if let's say I invest 10,000 to the overseas stock trading, right? So I get a gain profit of 2,000. Then my total account in the foreign account will be 12,000, which is the capital 10,000 plus the profit of 2,000. Then now he would like to remit back to the Malaysia of 10,000, which is the capital portion. Will it be taxed based on this remission?
Now, for these particular situations, one need to be very clear, meaning which you need to clearly define your nature of transactions. What is it involving, right? So you mentioned that initially your capital is 10,000, right? For instance, let's say you may invest your 10,000 into Facebook shares, for example. So of course, with the rising of the Facebook price, share price of the Facebook, of course, that will constituting your capital appreciation of 2,000, right?
Yep.
Yeah. So always bear this in mind, capital appreciation of this 2,000, even though you bring it back, it is free of the so-called tax because it's capital in nature. But you have to prove, you need to get the statement from the brokerage firm that handle your shares to verify that the extra 2,000 is actually in the form of capital gain. And of course, just now you also have asked about the, assuming you keep your 2,000, you only repatriate 10,000, am I correct?
Yep.
Yeah, 10,000 is also your initial investment, am I correct?
Yep.
Yeah, the initial investment will not be subject to tax. Simple as that. So you need to define very well the nature of transactions. So capital, no. Income, dividend, yes. Initial investment, your 10,000, definitely no. This is your original initial money.
Oh, okay. That means it must be very clear on
yes,
the
definitely.
capital portion. And
precisely, you need to speed up precisely which portion is actually capital in nature, which portion is actually dividend in nature, so and so forth. So this can be proven from the statement that the brokerage firm can be able to generate for you.
Oh, okay, thank you.
Yeah.
Then for the foreign source of income as well, if let's say you see a lot of Malaysians, like they love to work in Singapore. All right, so I have two candidates. One candidate is from JB. So he stay in JB. So every day he would travel to Singapore and work till he get a foreign income. Another candidate is a PR. So he stay in Singapore, work in Singapore and pay. So these two candidates will remit the monies back to Malaysia. Will they be taxed?
Now, okay, the key question now is whether does the repatriation or remittance of money from overseas did take place into Malaysia? That will be the triggering point, right? So if there's no movement of money, let's say one of the candidates work in Singapore, they earn the money in Singapore, they spend in Singapore, they do not actually bring it over to Malaysia. That is not the issue. It's out of the scope of this tax regime, right? If in other words, the triggering point is the repatriation that will take place from overseas to Malaysia. That will be the triggering point. And as long as that income is a foreign source income, like I mentioned, I believe it's an employment income, right? Employment income definitely is a payroll income, right? So definitely will be subject to our Malaysian tax law.
Oh, if
So,
the PR already paid the tax in Singapore, will we be affected on the double taxation?
Yes. Okay, now let's talk about this double taxation regime. Yes, Malaysia did sign a lot of double tax treaty with a lot of countries. Singapore is also one of them. If, like in this case here, you work in Singapore, you earn your payroll in Singapore, then you repatriate back, and of course you definitely have to account to the Singapore tax authorities, right? You need to pay the tax portion to the Singaporean tax government. That's for sure. You cannot also avoid that, right? So for that matter, here they will be a little bit complicated. With the signing of the double tax treaty, there will be a so-called bilateral tax treaty, meaning which you can claim tax credit with our Malaysian tax government based on the tax that you have paid to the Singapore government. In the end, you still need to be accountable to the Malaysian tax government, but you can claim the tax credit in the form of bilateral tax credit because it's a double tax agreement signed that you have paid to the Singapore government.
Okay.
Mr. Yap, the next two questions is related to the personal tax relief. Right? Okay, so one of it is the participant is asking for the tax relief on the domestic travel, cuti Malaysia. Does it include the items such as hotel, airfares, toll?
Yes, as long as those expenses that you incur. For instance, let's say you may stay in a hotel, but of course that hotel must be approved by MOTAC. MOTAC is the Malaysia of Tourism and Ministry of Tourism and Arts Center, right? It must be approved center. Same thing goes to those those homestay, but of course it must be approved homestay, not a private homestay. No issue, you can claim the accommodation expenses that you have incurred, but of course, please keep and maintain your receipt as proof of incurrence.
The other tax relief question is on the purchase of smartphone and computer. So the participant is asking, is it a new component or is it still under the same component under lifestyle tax relief as previously?
Okay, bear this in mind, this relief of extra 2,500 meant for the gadgets is in addition to the existing 2,500 lifestyle that has been provided. So in other words, you combine both, you qualify to claim maximum of 5,000.
Okay, the next one, Mr. Yap, he talks about the tax identifications number. So what's the difference between the TIN and the tax file number?
Basically, generally, it's still the same. It's an identity to you. It's a number allocated to you. It's a reference number allocated by RB to you. It's something like your birth certificate. The function is still the same.
So how the government gonna issue the TIN to the individuals?
Okay, as to the procedures, still the details is not being declared yet. What has been announced, they just mentioned briefly about the function of this TIN number as a form of registration by the taxpayer with IRB. As to the mechanism, as to the how it actually operates, no details are being announced yet. So you have to wait for further details.
Okay. And the next question is about excise duties on the sugar.
Yeah, okay.
So just now you talked about with the sugar will be taxed, right?
Yes, yes.
Imposed. So what if I have 2-in-1 without the sugar? Is it no tax or will be taxable?
Yeah. Again, actually, this is a form of excise duty. Now, again, why this excise duty is imposed depends on the sugar level of the product. If the sugar level of product exceeded certain level, which is quite excessive, then only this excise duty will be applicable, right? Well, of course, you mentioned those sugar-free, let's say sugar-free products, definitely it will not be part of the tax liability. It's only applicable to those excessive sugar contents.
So meaning that if the company issue there is a without sugar,
Yes.
so they'll be not entitled to the excise duty tax, right?
Definitely. So for if you want to be more health conscious, so drink less sugar. Simple as that.
Oh, okay.
Yeah.
Okay, I think Mr. Yap looks like we have covered all the questions in the chat box.
Okay, yeah.
So
that's great.
Okay,
yeah.
maybe I just ask one last question. Okay.
Okay, no problem.
Okay. Do you think the budget 2022 have done enough on encouraging the digital transformation of businesses, maybe the SMEs, and also the upskilling of the SME labor force to match with the needs of the new digitalized business era?
Okay, now, in fact, before the pandemic arises, the government has actually pushed for digitalization of the businesses, right? So basically, this will be the in thing because, like it or not, by digitalization, you can able to improve your work efficiency, right? In fact, if you look at some of the initiatives that have gone through part of the budget 2022, there are a lot of micro loan available. If you have to fund those digitalization program available for SME, and also they are available at a very low rate. I believe it's around 2 to 3%. In fact, if I'm not mistaken, in the state of Selangor, the Selangor government has also provided a grant of 5,000 to those SME who undertake those digitalizations program, which will be ending, as far as concerned, end of this year. So these are some of the initiatives that I know of as part of government to support the digitalization program towards digitalization for the businesses. As to the training for the staff, definitely that's how one initiative was you can able to claim tax relief, and when you enroll into those courses in upskilling your digitalization knowledge, this is also a good initiative to promote knowledge and awareness onto digitalization of businesses.
Okay, thank you, Mr. Yap.
Yeah.